everyone. In this problem, we're going to complete Chapter 2 AP4B workbook exercise. All right, so in this problem, we're going to be classifying some transactions and indicating whether assets, liabilities, or owner's equity are going to be affected and by how much, etc. And we provide an explanation if equity is affected. And as always, we need to ensure that we're balanced in the accounting equation when we're doing our work here. So first transaction says paid $3,300 cash for 3 months of rent. So a couple things to note here. I think right off the bat, we can see that we paid $3,300 in cash. So that's a pretty easy one, right, to note that we're going to reduce an asset. But then the other side of the equation here says 3 months rent. So keep in mind that when we're talking about the prepayment of rent, like in this instance, multiple months of rent that have not yet been, you haven't been in the place that you're renting yet. You know, when you're there for a month, you'll use up a month of it. But at the outset of a prepayment of rent, that prepaid rent expense is also going to be an asset. So cash goes down and prepaid rent expense goes up. And remember, prepaid rent expense is not an expense that would affect owner's equity until the time period elapses that corresponds to that. And we'll see that here in a later one of the answers. Okay, so number 3, we borrowed $5,000 from the bank. $5,000 worth from the bank. That's kind of funny. Okay, anyway, we borrowed $5,000 from the bank, so we took a bank loan out. So our cash asset increases by $5,000, and our liability increases by $5,000 as well. Purchase furniture for $2,500 on account. So furniture is going to be an asset. It's not an expense that would affect owner's equity because it will be continue to be used going forward, etc. We own it. And the key word here on account indicates that we did not pay cash for the furniture. We instead used some sort of, debt, a credit card, something to that effect, financing through the store, whatever it is. Anyway, it's a liability, so that we still owe the $2,500, but we do have the asset now. And in the future, that $2,500 will need to be paid. Okay, we paid $700 for advertising, so we are paying cash. It tells us cash in there, so our cash is going to decrease, and our owner's equity is going to decrease, and we can just say paid for advertising expense, and owner's equity will increase with revenues, decrease with expenses, and so that will reduce our owner's equity overall. Okay, provided services and received $2,300 in cash. So right off the bat, we see cash going up, and then as we just mentioned, owner's equity will be increased for revenue and decreased for expenses, like we saw in the previous problem there. Paid $400 for the furniture purchased earlier. So here's a portion of that payment on account. We're paying back $400, so we're going to reduce our cash by $400, so an asset, and then reduce that debt balance by $400 as well, so liabilities will decrease. And then we withdrew, so we made a withdrawal for $2,500 from the business for the owner's personal use, so we have a negative reduction in cash of $2,500 and a reduction in our owner's equity of $2,500 due to an owner withdrawal. So taking money out of the business, basically. And then here, as I mentioned earlier, used up 1 month of rent. So in this example above, we prepaid 3 months rent, but now let's, I think what they're getting at here with this problem is the first month has elapsed. Maybe this was January 1st, and now we're here at January, the end of January, and we're saying, okay, 1 month has been used up. So 3 months of rent, this represents $3,300. It represents 3 months of rent. So if we divide that by 3, then we're going to reduce that by 1,100. So our prepaid rent expense will reduce by 1,100, and we'll recognize the expense for using up 1/3 of that rental contract, basically. So we use prepaid rent and we recognize an expense, accordingly. And that's the prepaid rent expense asset that is being reduced here. And we reduced cash earlier to prepay, and now we're getting that prepaid asset that we basically purchased that contract to be renting is now being used up over time. And so that represents 1/3 used up. All right, thanks so much, and I'll see you in the next problem.